Hey Deepak, thank you so much first of all for coming on like SaaS stories at Revrag. We know that you have had an incredible journey at Slintel, and I have been a part of it, right? So I've seen how it has been, and it is first time that I'm getting a chance to basically ask a lot of questions from you, right? And we'll try to like keep it very crisp, on point, and at the same time would love to know a lot of insights from you, right? So it would be great if you can basically briefly touch upon your introduction.
Yeah, quick intro about myself. I've had many years of work experience. Worked in investment banking early in my career, and then moved to realize that tech was eating the world. Moved to banking tech and moved to core tech. Moved to the Valley back in 2015, right? And I was part of three zero to one journeys. One was traction, the other was eightfold. One is a public company, other is a unicorn, and the third one was Slintel, zero to one. So having done it twice, I was super confident getting into it, and I said, let me do it for myself right now, right? So
Yeah,
that's the backstory of Slintel. Slintel was basically helping identify anonymous buyer intent and basically predicting who could be your next customer based on a lot of data sets, right? And eventually, we ended up building an entire sales intelligence platform, which competed with the likes of Zoom Info, etc. So build that for like 3.5 years is a interesting journey, right? So we raised about 25 million during that process, got to 300 plus customers, and had a good exit. I think everybody made money, so it was a good exit. Back to Six Sense, and in Six Sense, I stayed there for close to 3 years, which was
yep.
great given the amount of time like founders stay in companies that acquire you. So I think it was a great experience. Was leading up all of the data assets as well as the sales intelligence portfolio, like a reasonable portion of the portfolio. And just recently, like about probably 8 weeks now, quit Six Sense and I'm on to my next second startup.
Great, great. Getting an idea, as you basically said that while you were working at Eightfold and other companies, you were into that space. But was there any moment that you realized, okay, this is the the thing that I want to basically work upon, or basically what inspired you as well? Like, was it like a itch that was happening from a long time, and then basically it converted into something, or like was it just a momentarily uh, thought process, right?
I think the itch to start a company was there for a very long time. I tried a lot of different things before in the non-tech era. The itch was there for a very long time, right? Like, but what do you want to do? Like, what specifically you want to do? And in B2B, it's very different to B2C, right? I'm sure you're doing a B2B company again. In B2B, you really have to experience that problem. I mean, you have an edge if you have experienced that problem and you figured out, hey, like, why is the world this way? Why can't it be like this other way, right? And you figure out a solution and you go pitch to others. So this backstory there was I was in Traction and Eightfold as like one of the first salespeople there, and we were pitching to a lot of prospects, right? And I sat there like thinking on calls and on email, a lot of this information that we ask them on calls should already be available. Like we used to ask them things like, what tools do you use? When are they coming up for renewal? If they use a competitor tool, right? If they're using a complementary tool, like we try to figure out like, hey, what have you integrated in your ecosystem? What is your band questionnaire, right? What's your budget, timing, authority? Like a lot of this should just be given in a box. And then we also realized, but we didn't want to just build anything, right? Like just for the sake of it. You always have to build when there's a market trend. And the market trend we were seeing at that time, this was back in 2016, 17 days, was buyers were being more and more anonymous, right? By the time they talk to a sales guy, and you probably know this as well, 75% of the decision is already done, right? Because they
Yep.
have gone to competitor sites, they have read G2 reviews, they have come to your site, they've done a ton of research, and you don't know what that research is, right? And they come
Right.
to the very end. So the sales guy is just helping them close the deal, right? Like you're not
Yep.
trying to force a deal down their throat. So we said, hey, there's so much anonymous activity happening. If only we predicted everything and we looked at whatever data points we could get, if only that information was available, and then we took that information and put it in the hands of salespeople, how
Yep.
powerful would that be, right? Like, so that was the thought with which we started.
Makes sense. So how did you recognize, okay, this is the opportunity that I want to grab? And was it like when you started, did you know that it is big enough market that you wanted to pursue, or like how was it like for you?
Yeah, actually, as a first-time entrepreneur, you don't think through all these things immediately. And some people do. I shouldn't say that for all people, but it was just, yeah. Like the thing about entrepreneurship is you find a problem, you feel really passionate about it to provide a solution, and then you worry about the target market and market size and everything later. I mean, this is something I've seen in first-time entrepreneurs a lot, right? That was how I was. Now I think a little differently as a second-time entrepreneur. But we just got lucky. It just happened to be a space with a massive TAM.
Right,
There were, I think, 6 million salespeople in the US alone, and in the whole world, it's like many times that, right? And we could put a tool in the hands of everybody that they could
right.
use. Like, it just happened to be a massive TAM, but we were not planning for it at the beginning.
Makes sense. So, like early stages, building a company from scratch, early stages, you sometimes hit a lot of walls, right? There are a lot of problems that come at your end, and basically, is there any specific or significant challenge that you remember from your days that was like very specific, and you navigated it through while you were in your early days building it?
I mean, there's so many challenges in the early days. It's hard to think of one. I mean, every day was like somebody said this to me, right? When you're building a startup, you have 360 bad days and 5 good days, right?
Hmm.
5 good days that are high-fiving, but then the moment you have a good day and you're high-fiving and you're probably drinking in a bar after that, and the next day something hits you really hard. Yeah. So, I mean, if I want to come back to your question, like I would say fundraising was like a huge challenge for me as a first time founder, right? I mean, we eventually ended up raising 25 million, but the
Hmm.
first uh, like the first year or so I was doing this as a side gig, and then when we got into it, I was pitching to a lot of VCs, would have pitched to like
Hmm.
50 plus VCs at that time. Everybody said no.
Hmm.
I mean, some said later, right? Like people sometimes they don't really say
Hmm.
when they say later, but it's still a no. And it's very difficult. So and then we applied. We applied to YC, we applied to TechStars. We got rejected everywhere, right? Like there was so much rejection. What happened, luckily for us, is we got into one of the accelerator programs called GSF
Hmm.
accelerator program, which gave us about
Right.
2K, right? So
Hmm.
the
Hmm.
moment we got that, bunch of us quit our jobs, or
Hmm.
like consulting gigs or jobs, whatever we had. We said, okay, let's dive into it. And
Hmm.
I remember my salary for the first like 1.5 year at that time was about $30,000 per year in the US, living in the Bay Area, right? So, so yeah, I mean, tough times. We had to conserve cash, right? You have to keep cash for like other employees, right? You can't pay yourself too much
Hmm.
money. But even after that, Ashutosh, like the fundraising was so difficult. Like those funds lasted for about a year, like 200K, and we had
Hmm. Right.
10-member team last for a year. So you can imagine how much each person was getting paid. But when we went to VCs again, they again said no. 6 months later, 9 months later, and then somehow I was able to crack like the VC code of how to get funding later on. But first
Hmm.
1 year was like every year struggle.
Makes sense. So, like, it is very hard to basically, as you were on the journey, Deepak, on your first year and then probably second year, right? People say, okay, find product market fit, find product market fit. It is like a main theme, right? At that stage, right? So, how an entrepreneur can basically validate a product market fit? How did you do it? And probably, how can a person or an entrepreneur know, okay, he's on right track or not?
Yeah. So I've heard so many definitions of product market fit, and you just Google it, you'll see how many people talk about it like in different ways, right? So when
Right.
we had our first board meeting with
Hmm.
VCs, this was the first question I asked them, like, what is your definition of
Hmm.
product market fit? I mean, they were like, we are the person who should be asking you, why are you asking us, right? So I was like, no, I just want to know, like, what is your definition? So we can see if we have product market fit or not. So I went around the boardroom asking them. But the definition that stuck to me was like something I heard from Mohit Aaron, founder of Cohesity, right now, a pretty
Hmm.
large company. So there was an event I attended, and he was on stage speaking, and he said he believes product market fit is achieved when an average sales guy can sell to the average customer of yours, because the
Makes
best
sense.
sales guy will always know how to sell, right? And the best customer will always buy from you. Like your best customer will always buy because they want to be nice to you and they want to like help you all. For the average customer, it's hard to sell to, and for an average sales guy, it's hard to sell to them, right? So when that happens, what that means is now you can scale your sales team a lot, right? Like because your average guy is able to sell, right? So you can hire on both extremes and you can scale it a lot. And your market is also very large because you're able to sell to the average customer. So you have a large target market. You can scale your sales team, or So that is one definition. But I've heard other definitions, and I've also rethought my definition because there's also this definition of you get all these customers, you get a ton of customers, but what if they're not happy, right?
Makes sense. Yep.
So some people have refined it to say that your NPS should be very high, or if you're taking the product out of their, I think Superhuman had this thing that if you take out the product from their hands, how many people will be
Yes.
hugely
I've
dissatisfied?
read that article. Yeah. Yeah.
Yeah.
Yeah.
So everybody defines it differently, but I feel like the first thing is like you have to be able to sell the product in a scalable way, right? Like that's to me is product market fit, and then they're buying it because there's a promise and there's a need, right? And whether the product delivers on the need or not is, in my mind, is a secondary question because when you're selling it, you're showing them the product and you're showing them what it can do, and they're saying, "Hey, we need this," right? And that's when the scale is done, right? So there has to. So that according to me, like resonated best.
As you mentioned, Deepak, like before scaling, right? Yeah, and even like once you achieve product market fit, then the next step is to basically start scaling, right? And scaling is can also be very haunting, right? I have not reached that level, but I have seen you basically juggling multiple things while you were growing Slintel, right? What were those strategic decisions that you took while basically growing Slintel, right? How to basically navigate through scaling as well, because it is kind of haunting, right?
Yeah. I think the first step is realizing founder can't do it all, right? You need a team,
Hmm.
right? And the
Hmm.
second step is realizing you have to let go when you hire the people. There are times when you have to step in, but most times you have to just let go. And as a founder, your job is not to step into every function and make it better. Your job is to set the right object, hire the right people. You have to set the right objectives if you have VPs or directors, right? And you have to let them run the shop. But that comes a little bit later. Let's step back. So initially, there are different parts of scaling, right? One is how do you scale from 1 to 20, 30 customers, right? From 40. I feel
Right.
like that part is all founder driven. You can't you can't hire salespeople or managers and delegate that. It'll fail. It'll absolutely fail, right? Because those guys don't know your product as well as you
How
do.
to sell.
Yeah, absolutely. So that part is all founder driven. After you reach a certain stage where I feel when you have too many meetings to handle, and I look at your calendar nowadays, which you post on LinkedIn, it looks like you are hitting up very quickly,
Yes.
right? But when you have
Right.
too many meetings to handle, and you just can't, right? And there's a good inbound flow, or your SDR team is doing like a lot of outbound, and you're getting enough meetings. That's when you hire. When you're getting burnt out, that's when you hire your first sales rep. But when you hire them, make sure you don't just like let them loose and say, "Hey, go sell," right?
Yeah,
You
absolutely.
have to have all the playbooks. You have to sit with them and train them for 3 to 6 months. They'll have to shadow you. So one thing that really worked for us well in Slintel was actually a couple of things. One was, we always believed in uncapped variable for sales reps, right? And let them make as much money as a percentage of the deal, and they get paid. We make more money. And when they came on board, um, we would show them the money. So for the sales reps have a ramp up time, right? They have 3 to 4 months generally to ramp up, and it could vary
Right.
based on what you're selling. So we would show them the money, which means that in the first 3 months, they're not hitting quota. They're probably getting there. So we would book deals on their behalf, like the founders, whoever was there was helping them book those deals, like closing the deals for them, booking.
This
And then
is
the money
cool.
would be
Yeah.
directed to their account, right? So now think of it. They have 50% fixed, 50% variable. The variable is sitting in their bank every month for 3 months. And then after 3 months, when they're fully ramped, you say, okay, now you're on your own, right? I have to go do other things, right? You've ramped up. And suddenly, if they don't hit the number, 50% of their pay is gone, right? So, but remember, you want them to hit the number. You want them to do better, right?
Yeah,
But
yeah, absolutely.
the pinch because a lot of sales reps, if you put yourself on their shoes, there is disbelief when they see a variable number. I mean, I would disbelieve a company when they say 50% is variable. Will they even pay? And how hard is it to achieve? So you have to show them it's not that hard to achieve. Like I've helped you for the 3 months. You have got full pay or more. So it's not hard at all. We want to pay, we love to pay. We would like to pay you 10x
More.
more. You can do like
Yeah.
10x more, right? Like we have no, there's no cap. Uh, Now it's on to you, right? You decide what you want to earn in the year, right? So that, I think that part really motivated sales reps. Yeah, I was just saying that of course we got like great sales leaders and we made some good hires, and we also made some bad hires where we had to let go of some people. So all of that was happening at the same time. But eventually, I think once you have like a reasonably ramped up team, like you have a good sales leader and you have like 3 4 ramped up say salespeople, and similarly on marketing you have a good marketing leader and 3 4 folks who, then I think you're set for scale. I think at that point in time
Mm.
you can just add fuel to the fire and the fire will expand, right? But you have to start
Right.
the fire in the first place.
And Deepak, while you were like handling customer success, you were handling sales and marketing, right? There was a portion which is very important, product. So how were you able to like focus more on product as well while spending a lot of time?
Yeah, this is a great question, and I feel like this is where I think a lot of people will have different opinions. So, like my opinions, slightly. I feel like initially when you have co-founders, right? Assuming you have co-founders, you definitely need one engineering co-founder, right? If you're a single founder, it's different. But if you have multiple co-founders, now what does the other co-founder do in a two-founder company, right? In a two-founder company, which we were 3 founders, but became 2 founders later on, is the other founder typically has to set up the go-to-market machine. Typically, you're building product and you're selling product, right? There's nothing else. And your entire selling product, marketing, sales, customer success, these are not easy functions to set up. They take time,
Right.
investment, right, from a founder. So in our case, product was where both the engineering founder and me, like the go-to-market founder, overlapped, right? We were both not product guys, and that's why we hired you as at that time, right? but
Yeah.
but we had to figure things out the hard way, and product is core. So we used to have daily meetings, brainstorming sessions, product roadmaps, all kinds of stuff, and the VCs also helped us during that stage. But I do feel like the reason I started off the way I started off is when I've seen companies where you have 2 co-founders, one person is the engineering founder, one person is a product founder. It doesn't
Right.
work that way. It just doesn't work. Like, what will happen to your go-to-market engine? You can't just hire a sales leader and say, go run this. Like, I've
It
hardly
won't
seen it.
happen.
Yeah, it'll fail. It'll fail. So you have to have shared responsibilities. Once you have scaled up some of the functions and you have hired leaders later on, right? Like once you have, then I think it's slowly okay to kind of come back to product and focus on product, right? Like I think when Girish talks about like says that he's a product guy, but I'm sure he would have been doing a lot of marketing, selling, customer service in the beginning.
He
Eventually,
said, I think he has mentioned that he has done sales, customer success, and now he's able to do product. If he would have not set up the sales and customer success function, it would
yeah,
have been a failure there, right? I think you're right. Uh, but what I have seen, like for as of now, like it is very small journey, a month or 2 months old. Uh, I think, but while selling also, it is to selling to customer and talking to customer in itself is so enriching in terms of getting that knowledge and then probably building the product. I think
yeah.
that's how you I remember that you were able to bring intent thing, right? So we built out those psychographics functions and a lot of things, right? So that came from you talking to a lot of customers, right? And that is how basically we were able to
Oh
like
yeah,
build
yeah.
those pieces.
That's a very, very good point you mentioned. I think as product managers, forget about like founders being product folks, right? I mean, in that case, definitely. But even product manager, I strongly believe every PM should be an external facing PM too, not just internal. Like
Right.
a lot of engineers who become PMs, and there's a lot of PM, and they refuse to talk to customers sometimes, right? But that's the absolute wrong way to build product. You have to be having 10 to 20 customer conversations every month. I mean, if assuming you have that scale, and you should be able to factor in all the inputs, all the FRs, etc., to figure out what you
Right.
need. Like,
Absolutely.
otherwise, who are you building for? So yeah, so that becomes like, and it actually, you're right. It actually becomes like it sets a good example where you're doing sales, customer success. You really empathize with customers. Now you can go back and build product. Now you're not going to build every feature that they're asking for because then you're not a product
Yep.
company. So like, I think healthy debates with your other co-founders and long-term vision,
Hmm.
short-term vision, all of that, and breaking the problem statement down, and that becomes like very important.
Yep. So we'll move to the next question, Deepak, and this has been a lot of question, like VCs asking me the same question now. So in this competitive landscape of like sales tech, right? Even SaaS is also competitive, but particularly sales tech, revenue tech space, it is like crowded. So how were you able to like build a differentiation for Slintel? Even like this question would have been coming from a lot of VCs to you, right? So what were your answers to VCs? And at the same time, in from the inside, what did you thought of like how will you create differentiation in the larger market?
Yeah. So if you just, if even back in 2018, if you just told VCs we are building a sales intelligence platform, nobody would fund us, right? Like,
Hmm.
and it's not that you're saying something else that you shouldn't be saying, but the whole vision of what the product will become in 5, 10 years is what you should do with them, right?
Hmm. Hmm.
And in our case, like the biggest trend, like I said, we were seeing was buyers are more and more anonymous. They're doing a lot of things on different websites and
Hmm.
different places. It's hard to map what they're doing and hard to predict who is even buying in this market.
Right.
So we said we were showing like basically how sales intelligence has evolved, right? In the like 1990s, it was like Steve Jobs. You would see he was picking up the phone, cold calling all the time, right? Like 2000s and Zoom Info and all of these platforms came in. There was a lot of cold mailing done, calling. You
Right.
know, LinkedIn came in, and there was a lot of LinkedIn outreach being done, etc. So we said, hey, that's all the old way. The new way of doing it is basically understanding what anonymous buyers are doing, where are they spending time, really cherry picking who is even relevant for me and who is even looking to buy my product. Like they have to be looking. You can't really force a sell,
Hmm.
right? And you have to understand their tech stack, their pain points, and right. So that was the whole pitch. And then we had to show like, so that is the current, but what will this become? Like you have to see VCs
Hmm.
want to invest in trends, right? They want to
Hmm.
invest in ideally a micro trend right now, which becomes a macro trend in a few
Makes
years.
sense.
But that's
Hmm.
10 years early. And they latch on to that. And then once they have a thesis and they have, many VCs have analysts and they have large teams building thesis on different things. But once they have a thesis, then they go and identify, hey, what are the companies we bet on? And they would probably pick one
Hmm.
company in a sector, right? Like evaluate multiple. So that now they're betting on the team, like if they like the thesis and the problem statement and the market size, TAM, all of them are important. Then they look at the team, technical chops, right? Market chops of the company, and is this a bet we want to make as a fund? Because they can choose not to invest in that sector at all, right? They have like most pieces of sector
Absolutely.
agnostic. So
Hmm.
you're not competing with just the companies in your sector. You're competing with companies in all sectors, like even like cybersecurity in our case, like you were competing with them, right? So and you have to start making sense from a numbers perspective, from a CAM, from a returns perspective, because their lens is very different
Hmm.
than founder lens.
Hmm.
Yeah, and that helped us. In later stages, I think it was momentum combined with like every stage is different, Ashutosh. You know that, right? So
Yeah.
seed stage, people are looking for strong team, great idea, TAM. Series A, when we were doing that, or pre-Series A, you have some revenue. So they look at efficiency metrics, right? How efficiently are you able to scale customers and get revenue? What's your CAC, LTV, and all of that. The next stage, retention becomes important. What is your
Hmm.
GRR, NRR, and burn and everything. Like so, different stages, people are looking at different things, but the common thing in all stages is a great idea, great team, strong vision, and a big trend in the market that you're trying to capture. That is what will like propel you through all the rounds.
Makes sense, makes sense, Deepak. So you briefly touched upon fundraising, right? I would like to like go a little deeper into that, and for others, folks who are listening to this, probably, right? So, what was your strategy while going into your first fundraise, right? Did you take help from anyone, right? How did you align the investor to your vision? Because at when you were building this type of company, there was a huge giant sitting like Zoom Info of sort, right? So how did you align customers? And were there investors which were able to understand your product while you are giving the first pitch, because it was a complex product per se when you were starting, right? So like were there investors able to understand your pitch?
Yeah, and the first fundraise, right? You're talking about.
Yeah, first fundraise majorly.
Yeah, I would say first fundraisers are super difficult. Like probably the most difficult in my opinion. I mean, every fundraiser is difficult, but first fundraiser is like incredibly difficult for first time entrepreneurs, especially the VC round, right? And there, yes, we had mentors. We had so Rajesh, he was the chair of GSF, so he had given really good advice in terms of how to fundraise, and he said fundraising is just like sales, right? You have like a reverse funnel where you talk to 50 VCs, 10 show interest. You reach out to 50 VCs, 10 show interest. You have conversations with all of them. Then with three or four of them, you have second round and third round conversations. Probably all will say no, right? At that stage. So then, or some will actually say, and some said to us that yes, we want to participate. Find a lead, right? And if
Yeah,
you're
yeah, this is the basic answer for every investor.
correct. So he said, like, you just need one lead. Deepak, keep in mind, you
Yeah.
just need one lead. When you go through the whole funnel, and you need that one. And for that one lead, we were struggling, right? And so then, like, the other interesting thoughts he had given was look at the fund sizes you're pitching to. So if you're pitching to a 50 million or a 100 million, a smallish fund, right?
Mm,
They will be the lead if you're raising a 2 million round, right? Because their check sizes will be 500. Like VC will have to do 30 40 investments, right? Typically from there. So
yep, yep.
if you're pitching to a 500 million fund like an Axel, etc., like big funds, then the lead is probably going to put in 2 3 million at least, right? So then your fund round size has to be 4 5 million. So if you go to like an Axel and say, I'm doing like a 2 million seed round, I mean, they may or may not, right? Like, but for them, it's not meaningful enough to be a lead in such a round because the returns they have to generate for their LPs are also much higher. So so then we had to kind of look at, hey, what are the funds we are pitching to, and how much do we want to raise, and how do we position accordingly. So had to go through the whole process. But what actually helped us, Ashutosh, finally was relationships, right? So we pitched, everybody said no. We tried all kinds of combinations. There was a VC meeting I remember. I walked into, and this is the story I tell everyone. This is Stellaris, right? Like I walked into the office when I was there, and we whiteboarded for about 3 hours. And after 3 hours, Alok just asked me a question. He said, "Deepak, do you really think you're ready for a fundraise right now?" I would have said yes. I just thought about it for a moment and I said, no, let me come back to you when we are ready. Right. And we were literally running out of funds and we had no money in the bank.
It was a good trick, Deepak.
So I went back, like worked on, and the other thing I learned is you need a couple of quarters of momentum, right? You want to show like the hockey stick momentum. So I went back, worked for a couple of quarters, tried to get that momentum. Like 10 customers closed in quarter one, 30 closed in quarter two, kind of show that momentum. And I went back to Alok. I said, I think we are ready. Right? And then he gave the term sheet. So he had we had spoken so many times in the past, like we had been speaking for like 2 or 3 years in the past on different things, right? A couple of times around fundraising. And finally he made the move, right? So he had a thesis, he believed in it. He just wanted to see the right metrics come out and the right vision. So a lot of things are like, I look at it as long-term relationship building with VCs before they
Makes
actually.
sense. So we'll come to the exit as well, Deepak. You have seen an outcome, right? Uh, Seeing an outcome for an entrepreneur is like there are like 10% startups survive, and then there is only few 1% startups see exit or IPOs, right? So it is a rare chance, and that too like a good exit. I think everybody knows Slintel now, at least in India, basically, right? So in if you are building in RevTech and sales tech space, you'll know Slintel. So while you were building, right, you must have been approached with lot of companies, right? So how did you first decided that this is the right time for Slintel to basically exit, and sense would be a right fit there, right? uh, how did you came to that kind of a decision at that moment?
Yeah, yeah. Pretty interesting time for us to exit. I always say, like founders, most times the good exit options are IPO or acquisition, right? And acquisition could be, I mean, the best acquisitions are from strategics, right? Not the revenue acquisitions, not the acqui hires, but the strategics because they pay like obviously a much higher multiple because it's IP that they're acquiring, right? So as founders, I strongly believe this, and our VCs also used to tell us is you have to continuously keep talking to all the acquirers, potential acquirers. You have to make a list of a
Hmm.
market map, right? Like who are your competitors, who are all the complementary products, all of that, and you have to constantly talk to them. So and you obviously don't want to show any kind of desperation whatsoever. You're talking to them more of, you're not trying to sell, right? You're just talking to them to say, hey, we build a relationship because these are long relationships.
Hmm.
And sometimes, you might show a product demo, you might show, hey, we are increasing revenue by this much every quarter. Just keep in touch with them, have coffee with them, keep talking to them, keep the relationship going, right? So that I think every founder should do, right? Because you never
Hmm.
know when things come knocking at your door. And we were doing that, but we weren't actually doing that with sense, right? So since story was like very very different. Again,
Hmm.
a relationship helped there. So what happened was I had pitched I think to Sapphire Ventures in the past, and they had
Hmm.
probably said no like times, but Sapphire connected us to six and was looking for an acquisition. At that
Hmm.
time, what happened in Slintel was we had raised a $20 million funding round. I think you remember
Hmm.
that.
Right.
We were all
Right. Right.
celebrating.
Right.
Like uh, we were super cash flow efficient. Like we had raised 25 million, but I think we had burnt about maybe 3 million to reach 3 million in revenue at that time.
And
So
we
we
were
were,
doing revenue as well, right? So I
yeah,
think we were at 3-4 million revenue at that point.
roughly, yeah. And we had burnt less than that, right? So we were super cash
Yeah.
flow efficient, and everything was looking really great. But what was happening at that time, Ashutosh, at the same time that our acquisition was happening, just a few months before, ZoomInfo and Demandbase were like some of the other big players in the space. They had
Hmm.
consolidated, right? So ZoomInfo had acquired Incent, and you guys know that, and they had acquired Chorus and a bunch of others, and they were bundling and packaging products at the same time. And Demandbase had just acquired Demand Matrix and Inside View. So when we were talking to Sense, obviously, like there was a lot of consolidation happening in the market, right? And so we both, I think, decided that like joining hands together would make both parties like really strong and take on the market. Individually, I think probably Six Sense would have had a list of other acquisition targets too, right? Like I don't know, but for us, we were at like what around 3 million ARR. We had to
Yep.
go. We missed that boat, and a lot of acquisitions are not. It's not now or later. It's now or never, right? So
Right.
if we said never, then we probably had to go IPO, and it was a long journey,
Hmm.
and it's a good journey. But the thing is, we were operating in a market that was consolidating, which wasn't the
Makes
case
sense.
1 year ago, right?
Hmm.
And we kept asking ourselves that question: hey, what should we do in this market? Can we? So there were only two options for us: either join hands and become stronger together, or raise so much money, like maybe like me and Rahul were discussing this, right? Get to maybe 10-20 million ARR very quickly, right, with the money we had, and then do like between a 50 to $100 million round,
Right.
right? And
Right.
when you do that big around, then you can go and acquire companies, right? And
Hmm.
because what happens when the biggest players are bundling stuff and discounting and selling in the market? And now there'll be three big players, right? Demandbase, ZoomInfo,
Apollo.
and so and Apollo became like big later on, right? So we had to do that, and we looked at everything and we said, hey, the first one feels like it's the best option for everybody, for
Okay.
our
Yeah.
employees, for investors,
Hmm.
founders. And with Sense was growing super fast too, we said let's ride the
Hmm.
growth wave in Sense. We're not stopping our
Hmm.
journey, the journey still continues, but we just become stronger
Right.
together.
No, no, makes sense, Deepak. I think it was a great fit in terms of, I think, culture as well as you mentioned while we were getting acquired, right? And uh, people there and the culture plus the thought process, I think it matched, and it was a great acquisition. And I think there are acquisitions happening, but successful acquisitions are much fewer, right? So companies get acquired, but they basically are not able to provide value to their acquirer as well, right? So I think that is one thing I think I've seen you working tremendously towards that. So
Yeah.
I've like I have seen you as a person I would like to become one day. But yeah, yeah, you were saying something.
Yeah, I was just saying acquisitions are incredibly tough to make successful, right?
Yes.
So a lot of acquisitions fail even during the diligence process. right?
Hmm.
Very few go through, and the ones that go through, many times the acquiring company, although everybody has the best intentions, right? Everybody wants to
Hmm.
merge teams, processes, let's go, and you shake hands, you pump fists and do all of that, but it's still extremely difficult because you're uh, like and many companies are not successful because the teams, when you're breaking the teams down and every team is reporting to the acquired company, cultural
Hmm.
differences come into play. So you have to make sure they have the right culture. Processes break down, code, right? Your code base is different, their code base is different, so you have to rewrite code and relaunch. And then you go to market. The go to market team of a large company does not really bother about like a smaller company, right, selling a product, because so then you have to
Hmm.
devise the right incentive plans and comp plans, and give them maybe special spiffs if they are selling the smaller company product, but they would probably not know how to sell. So then you have to have your salespeople or even founders, again, do mock sales with them, mock calls, and so there's a lot that happens, and that's why there's generally a lock-in of 2 years or so for most companies, because within 2 years, I don't think
Hmm.
any company would, if the founders leave within 2 years, everything breaks down and acquisitions are not successful. So we generally felt that was the absolute wrong thing to do as founders. It doesn't do
Hmm.
justice to the team, to the company that acquired you, and the market that you want to take over, right? So we stayed, and that's where we stayed for an extra year, 3 years. But um, but yeah, it's also very, very hard. Let me say, as a founder, it's very hard because you lose control, right? And you were in
Hmm.
control earlier of the whole company, and now you're reporting to somebody who's reporting to somebody, right? There might be layers, and you have to get stuff done. And every day you have to remind yourself, hey, you're not the ultimate decision maker here, right? And there's legal, procurement. There's large companies have lots of processes, and you have to go through all of that. And the one thing that kept me going, like this is in my book as well, I mentioned, is there was this funny story when I talked to someone and he said, hey, Deepak, there'll be so many moments of frustration, or,
Yep.
things that come up after an acquired company goes through the acquisition, finishes the acquisition. Said, do one thing, like don't forget to do this. Take a picture of your stock listing, put it up on the wall, right? So every time you're looking, keep looking at and then remind yourself, uh, like to stay, right? Like to stay, because it's generally a meaningful amount. So it's always, so that's the advice I would give for like any founder that is looking to get a.
Yeah, I think it is painful, and there are a lot of legal processes that are done. And I wanted to ask the question, but you have already answered, Deepak. Like, what was the process like for you, and like how long the process was, and is there any tip that you want to give to a founder getting acquired, or even like somebody is trying to reach out to them for acquisition, right? So,
Yeah,
any tip or basically. I think you have already mentioned that you should probably talk to uh, your acquirer of sort in like basically who can be in future. But any tip while process?
yeah. Actually, I'll give you a tip even before process, and then I'll talk about the process and some tips
Yeah.
during the process as well. So one of the most important things in strategic acquisitions is IP, right?
Mm-hmm.
Companies are acquiring your IP and your tech. So make sure when you're building the company, your IP is extremely clean, right? If you're using, for example, if you're using open source libraries, tools, make sure you read the agreements, or make sure you're using it in the purview of what it should be used, right? And then if you're, for example, signing agreements with customers, right? Employees, even employees that you have let go, everything is scrutinized during the diligence phase of the acquisition. Even exited employee agreements, exited churn customer agreements, everything is scrutinized, right? So make sure in none of your customer agreements, right? Like, and IP is the most important thing. The dollar values itself don't matter that much in most of these acquisitions. It's just that make sure the IP is very, very clean, that you own the IP and you're just servicing the customer. And so make sure the language is very clean. Run it past lawyers if you want to, right? I've seen some deals that have gone through the final stage fall apart just because of IP, just because there was one customer contract out of 1,000 companies, where sometimes when a big customer will come into play, like a Walmart, etc., and they will say, "Hey, you have to sign our agreement, right, on our terms," and then you don't read some of the fine lines and you sign that agreement, and somewhere it will be mentioned, or it could be mentioned, that whatever you're building like is belongs to us, for us, right? And this IP you cannot. So there are these fine clauses, and you have to be extremely careful when you're signing those, because even one customer like that, the acquirers back off when they, and this all happens in the diligence phase, right? So IP has to be extremely
Hmm.
clean. The agreements with employees, I think in US you have PIIA and CIA. So basically, all the invention rights and agreements, assignment of that to company, etc., should be very clean. If you're engaging with contractors, that also gets scrutinized, right? And the acquisition or diligence process in companies is probably the most excruciating thing you will ever get into your life. I don't know about the IPO process. I've not been. I've heard it's tougher, right? But the acquisition diligence is, my God. Like it's. I have no words for it. And I've talked to like a lot of other founders too. I've talked to. We were recently at SaaS Boomi. Me, Arjun Pillai from Incent, Mitul from Demand Matrix, and
Yeah.
there's another couple of people who sold companies. All of them had the same experience. So over 200, 300 documents are asked in the diligence process, and there are teams on both sides, right? So the acquirer will have the legal team in US and in India, if you have operations in both places, their tax team and their financial diligence team. And these are like big brands, right? You'll have PwCs of the world, Deloitte, etc., who do like extremely thorough job in scrutinizing. And then on your side, you will have your Indian legal team, your US legal team, your privacy counsel. Like they might have a privacy counsel, so you might have your privacy counsel, and then you will have your tax advisors. And so it's basically a group of like 30, 40 people from each side coming together. Right? And when that happens, a lot of documents are asked. Some you have to like figure out how to create, like even the smallest of things, like for example, maternity registers. Did you maintain that, and can you provide that to me? Or biometric assessments, like when people were entering the company, were they signing the register? Can you provide those registers? Like all kinds of things are asked, but those are not deal breakers. The good news is they are not.
Hmm.
The deal breakers are make your IPs will keep, make sure your ARR, whatever numbers you report, churn, all of those are like extremely clean, because you have to come up with a disclosure schedule and you have to mention everything, right? And
Hmm.
so that part takes time. It takes 2 3 months at least. Sometimes some cases more than that, 6 months or so. Especially if the transaction amount is meaningful. Like people want to make
Hmm.
sure, both parties want to make sure they're entering the right terms. So at this time, you still have to run the company. So what I did was I called like all my directs and I said, "Hey, you guys are running this. I have to
Hmm.
assume that I'm not going for a vacation, but assume that I'm kind of unavailable for next 2 3 months because there's a lot going on, and I'll loop you in as I need it." So your VPs or your directors have to take over the reins. And that's why when acquisitions fall through, it's very distracting for the company, because everybody is hoping, and that's why you should not
Hmm.
announce the acquisition to the employees and everybody. Maybe like a small group of people should know about it, primarily because most times they don't go through, right? So it's a very small group, and then you start working together. And then the other thing is, once you finish this 2 3 month process, you will receive a merger document, right? Or a merger acquisitions document. And that document has a lot of clauses, right? So that probably close to a 50-page document. There's a lot of reps and warranties, and you would probably have not seen any of this in your VC funding rounds, right? So these are very
Hmm.
different documents, all kinds of language, non-contravention, non-infringement, and then all kinds of reps and warranties that come in. And then you have to start looking at, and you look at all of that, and then you again have to go back now, right? And you have to really think like, hey, how do I do this? And is it standard? Not. So there's a lot going on. So you'll need help. Talk to people who have sold companies before, so because they can tell you. And then when you get to that, you might even need reps and warranties insurance, right? So,
Hmm.
so then you have to start talking to an insurance company to protect you on that. And guess what? The insurance company will give insurance after doing diligence again. So they now there's another round.
Oh my God. This is this is haunting, Deepak, much haunting than building a company.
Yeah, I would say it's probably like I've gone through a lot of tough moments in my life. Like, for example, like preparing for IIT was one of them, 2 years back in
Hmm.
the day. Building
Hmm.
company was difficult. The acquisition process is probably one of the most difficult phases you will go through in your life, because you have, I mean, it starts with a good handshake and
Joy.
everything, right? Like, oh
Yeah.
wow, like, the deal amount, this is amazing, people. And then suddenly you see like the conditions coming in, and you see the diligence going through ups and downs and questions. And then at every point you'll feel like, will the deal go through or not? Will the deal? And
Hmm.
every day it's like the highest, the most, I mean, maybe like you you follow cricket too, right? Like think of it as like the high pressure cricket match, like for 3 months non-stop, right? And then at the end of it, like, so that's what I did. Like once the acquisition was done, I was like, I booked a flight to Hawaii. For one
Uh,
week, I said, nobody disturb me. I'm going to unwind.
that
Uh, that was-
So Deepak, like after a successful acquisition, like how personally it has impacted you, right? Professionally, we know like it was a good acquisition, and you have had a successful run there as well, right? And now you are starting up with a new startup. So like personally, from the angle of your family and other stuff, right? How was it for you? Like because as you were saying that earlier you had control, later you didn't had, and there would have been some spaces there.
yeah. When you're asking the question and you talked about family, I just reminded me of a joke. Like we were at SaaS Bhumi, me, Arjun Pillai from Incent and Mithul from Demand, and we were on stage sharing our acquisition stories. And I think Mahesh Ram, he had sold his company to Zoom, so he was on stage, and he said something funny. He said, when the offer came, I was like, no, I'm not going to do this. I'm not going to take this up. The co-founder said, just go home and talk to your wife once, and then come back. And then come back and tell me whether you want to take it or not. And then everyone in the room laughed because everyone went through similar experiences. When you talk about family and you bring the offer to your family, I mean, you obviously have to disclose to your wife, right? Probably your parents or whoever, you have to talk to them. And you will have to talk to your board, by the way. Anything that you get, you have to disclose to your board, right? So the family, I mean, generally would say, hey, I mean, sometimes they would say, think about it, but generally they would say, hey, this is meaningful enough money. You should probably consider, right? This is the most common answer you'll get from family. The board might say, hey, maybe you can go like do this in the long, I mean, continue to build or exit, like it's up to you, but we think you can still build. You'll get different. And then you have your own inner voice saying something, right? And your co-founders saying something. So yeah, you have to take all of that into consideration. But overall, how I think your question was it meaningful and how did it change like uh,
Personally, like how
personally?
has it personally changed you?
Yeah. So one thing I realized, and this happened post acquisition, you get a lot of money, right? Obviously, if it's a good acquisition, um, and you have never seen that money before, right? You have It's probably like winning a lottery, or you have not seen that money before. So you have to really, really stay grounded and really, really not spend that money immediately, and think about how do you kind of like in my case, how do you kind of delete it from that one portion of your head, because the other portion of your head, because there's no real happiness in money, right? You're kind of, it's helpful, it's comforting, you can lead a comfortable life, you don't have to think of money again, you can work, you don't need to work for someone, right? So all of those are there. But then how do you actually like separate that part out and separate the passions in your life, because the passions you still want to pursue, those are the ones that give you happiness, right? And you associate money, so that is one part which we had to go through as well in our family, like for 6 months, 1 year, like both of us, like we had to like, hey, like completely, it took time, right? Forget that portion, it locked somewhere, don't even worry about that, just focus on what you want to do. Uh, and and then we said like nothing changes, right? Maybe we just move to like a bigger house, but other than that, we still buy the same brands, we still eat the same restaurants, we still do the same stuff. We wanted to, again, it depends on what people want, we just wanted to stay extremely grounded, true to our roots. And because we had kids as well, and we wanted kids also to grow up in an environment where they value hard work and they value achievement and passions over everything else. That was for me. The other thing that, what was most rewarding for me was all of our employees made money too. And I remember moments where I had messages from employees saying that their family wants to thank me, like their mom wants to thank me or their spouse. They were like, hey, now, and some of them bought houses and some bought
Yep.
cars. Some, were able to send kids to good schools. And I used to get all those messages on my WhatsApp. And that as a founder is like, there can be no other greater feeling in the world than, because you onboarded employees promising something or saying, sharing a vision, right? And now you're kind of seeing that vision through. So that satisfaction you just cannot get like with anything else in life. So all of that was keeps you very happy. At the same time, there are bigger things do in the acquiring company, and there are different relationships you have to manage. So you kind of balance all of that out. But overall, I would say it's a very rewarding experience. Um, it's a very stressful process, the whole acquisition process, but extremely rewarding at the end of it. And if you get acquired, do the right thing by staying in the company for some time, making the other company successful, because that becomes even more rewarding. Then you feel like, okay, you have it was
Hmm.
like you've added some value in the world and to both companies, right? So
Makes sense.
yeah.
So Deepak, you have written a book recently, right? Which is Idea to Exit, right? And it encapsulates a lot of thing what we have discussed today, right? So what inspired you to basically write it? How did you get the idea basically writing a book?
Yeah. So my number one motivation was that when I was starting up, I had no advice or very little advice on how to start, how to register a company, how to raise funds, how to scale. Like we were talking about all of this, how to get acquired, and what happens post acquisition, right? Like I felt like when I was looking up, I felt there were not enough books that talk about the whole journey, and the only reason I wanted to write this book and share it to the world was I said I think there should be a lot more entrepreneurs or aspiring entrepreneurs who read the book and be like, yeah, I can do it myself. It's not that difficult. I can just start, right? And then I also thought like there will be entrepreneurs at different stages of the journey, early stage, late stage. So they can all look at like, hey, how to fundraise effectively, or how will life change post exit? If there's an acquisition coming up, what are the things I need to keep in mind? So the idea was just impart that knowledge on the world. The idea was not to make money from the book at all. So I just priced it at a nominal price and said, let me just put it out there. So anybody who's going through any of the scaling, starting up, or like acquisition phase can just pick it up, read it, and hopefully it adds some value to their lives too.
Great, great, Deepak. It was a very insightful session, actually, podcast. Deepak, thank you so much for sharing such valuable insights on SaaS stories.
Thank
Uh,
you.
so, to our listeners, how can they follow you and your work? Where can they find you?
Yeah, so you can find me on LinkedIn, and my email deepak.anchala@gmail.com. Right, I'm not very active on a lot of social media sites other than LinkedIn. LinkedIn is my go-to platform. You find me there.
Yep, and we'll also give the link in for the book. We'll also give the link in the description. Thank you so much again, Deepak. It was great having you on the show.
Yeah, thanks, Ashutosh. Have a good day.
Yeah.